The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the December 19th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and I, we must master each and every day. So let's begin our day with one of my favorite empowering beliefs system, and that is this. Become your own electrician. You know, beliefs, they've got the power to create and, of course, the power to destroy. But you and I, we've got that incredible, extraordinary, awesome ability to take any experience of our lives and create a meaning that either disempowers us or one that can literally save our lives, empower us to places we've never even dreamed about. Think about it like this. There's only one thing that we can control in life, and that is the meaning that we give to something. That's the beauty of the markets we trade. We've got bulls. We've got bears. One that sees an event as a selling opportunity. One, a buying opportunity. Your beliefs, the meaning that you give to events, statements, criticisms, whatever it might be, you are the one in control of that meaning. And when you really think about it, that is pretty cool because what we can or cannot do, what we consider possible or impossible, it truly is, it rarely is, a function of our true capabilities. It's more likely a function of our beliefs about who we are and what it is that you and I can accomplish. And that matters because we're all looking for breakthroughs. It doesn't matter what level you're at, and all breakthroughs begin with a change in beliefs. Question always is, always should be, how do we change? The most effective way to change is to always associate and to link our brain to massive pain with an old disempowering belief. We all have them. We've all got disempowering beliefs, folks. This is a good time of the year. Forget about the resolution. Write down what your disempowering beliefs are, and then determine all the pain that they have caused you in the past. And then rev it up, because if you continue to do the same thing, what kind of pain are they going to cause you in your future out there? That is called the Charles Dickens process. So 'tis the season, folks. You should really use that lesson in life out there. You know, knowing what we don't want. That's why we go ahead and we figure out what is painful out there. It really is just as important as what we do want, because you've got to be able to take that void once you get rid of it. You've got to get rid of that disempowering belief system. You've got to get rid of that pain, and what you're going to replace it with is an empowering belief system. Who it is that you want to become, where it is in life you want to go to, whatever it is. If it's technical trading, then tonight's a place you ought to go to. You ought to sign up for Mastering Probability. That's easy to do. You can do it risk-free, totally risk-free, no charge your credit card or anything. You can do that on the homepage at TFNN.com, and you can join me for what's going to be an incredible workshop, a 1-hour workshop. And if you can't be there live, that's cool, because it's going to be archived on your members page probably by Friday evening. You can look at it over the weekend. The key, folks, is that you and I, we've got to know that at any moment, a decision that we make can and will change the course of our life forever. To me, that's really what it's all about. I know there are going to be people that are going to attend tonight's workshop, and I'm going to change the way that they look at a chart forever. That is the cool thing for me. Now, for you, maybe it's going to be the very next person that you stand behind in line. Maybe some of you are traveling. Say hello. Smile to that person. You might have more in common with them. They might be able to help you solve a problem. Maybe it's the next phone call you make or receive. Maybe it's the next movie you see, the book you read. And I'd like to say the next workshop that you attend out there. Any one of these things, folks, they can, and they likely will be the single thing that causes your floodgates to totally open. And then all the things that you've been waiting for will all of a sudden fall into place. Tonight's the night, folks. Go sign up for the workshop out here. Take a look at this Rhodes Momentum strategy. It's not just an indicator. It's an entire strategy, and I'll look forward to seeing you there. This will be my finest hour. I hope it'll be yours as well. Right now, the Dow is off 31 points, giving back a little bit of its gains out here. Not a big deal. Not in a market that was up 300-plus points, or almost 300 points out here. Yeah, the S&P It's down 6 points right now. It's trading out at 18.03. The NASDAQ Composite off 18. It's trading at 40.52. Russell 2000 down 5 points. It's trading at 11.28. Apple struggling a little bit this morning. It's down $4. Formed a little bit of a hammer candle out there. We'll take a look at that here in a few minutes. To lead the charge to the upside, we've got IAC Interactive Corp. It's up $5 and change, up 9% right now. Worthington Industries up 12%. That's up $5 and change. Accenture up $3. That's up 4%. You've got VIP Shop Holdings up 3%. Rocket Fuel, that's what we need, a little fuel in the marketplace. It's up 5% here this morning. Solar Wind, Solar City, both of those are up $2 to the downside. Tesla Motor, it's on fire a little bit. It's off $5. Not a big deal. Apple down about $5. Semtech, SMTC off $4. Biogen, BIIB off $4. Darden Restaurants down $3. You've got Wynn Resorts off $3. Our call-in number is 877-927-6648. Give us a call, folks. We can absolutely take a look at your stock chart out here. Now, if we take a look at yesterday, take a look at what the market is doing here. We're going to take a look at the 30-minute chart for the ES Mini out here. If we go from the low that was put in, and that was at 2:30 yesterday afternoon, the low out there at 17.60.75. If you run from that low all the way to the high at 18.06, hey, just a normal retracement takes you down to 17.89. You're at 17.97 right now, so that would be a little bit more pain. So even if you do see the market pull back a bit, don't get in the, and we'll take a look at, let me add the volume bars out here on the, I won't do that right now. We'll come back and do it. So just look, the normal pullback is 17.78. That would be a real stocking stuffer. That would be a real gift out here. But just the dead cat bounce takes you to 17.89 inside of the market. Market neither overbought nor oversold at the moment. Of course, that's what it did yesterday afternoon as the market moved higher. It got into that extreme overbought condition, had to work its way off. In essence, that's what it did here, especially as we came into the open at 9 o'clock this morning out here. So 17.89, that's just a normal move out here. Let's go check in on the Euro-Japanese yen currency pair. Let me see what that is doing. Here's a 30-minute chart for the Euro-Japanese yen. It's a little bit of this little rising price channel that it's moving into as we speak right now. What I told subscribers this morning, I couldn't tell whether this was forming an A to B equals CD down, and if it was, I was going to go ahead and put some pressure on the markets. Now, this is traveling in a nice little consolidation box out here. The bottom of the consolidation, that's at 140.99 out here. I don't know if it'll really hit that low or not. Right now, what it's doing, you can see it's into the rising price channel out here. We'll see if that level holds. If it doesn't hold, then I suspect it's the A to B equals CD down that takes us lower and takes us into some lower price, a little bit of a give back here. But, folks, that would be, in my opinion, that would be a head fake out here. This is not a selling opportunity. What you're looking for is buying opportunities in the marketplace. With yesterday's volume moving up, with the Gartley buy patterns that were present in the market coming off of the C point the way that it did with such big volume right now, just really working off a overbought condition inside of the marketplace. So 1-to-1 A to B equals CD down in the Euro Japanese yen. That would take us to about 141.53 out there. On the daily, on the weekly chart for this currency pair, let's take a look at the weekly chart. It wants higher price, and that's what's more important. The larger trend out there, and that's what we're going to be taking a look at in tonight's workshop, really understanding a tool that can help you understand the trends out there, because that's what it's all about. And if we take a look at the Euro Japanese yen on the weekly chart, let's go do that. We did that yesterday as we were looking for signals as to what might the market, how might the market react when we were looking for little pearls out there. And the red line going across my screen, that is at the price level here of the highs. We had really three tops out here. One that took place on June 5th, 2009, another that took place on August 7th, 2009, another that took place on October 23rd of 2009. We got up above that. There is no more resistance inside of the Euro-Japanese yen. One could argue and say, hey, Steve-O, you're overlooking the 0.618 retracement area. That comes in at 140.98. We're trading at 142.15. Okay, I'll give you that. We are at the 0.618 retracement, but the real battle line here was the old line of resistance that price has moved through out here. So the 0.618, you can't trade just Fibonacci numbers. You're looking for patterns out here, and this pattern is on a tear. It's on a move up into probably about the 153 range. At least 149 should be. 144 is its next stop. That's the next primary trading range boundary line. 144.32. We'll assess things as price moves up there. That is on the weekly chart for the Euro Japanese yen. Let's go check out the indexes and see what they're doing. Let's start off by taking a look at none other than the New York Stock Exchange. A big day yesterday. Well, that's the week. That's the monthly chart. Let me go back and take a look at a daily chart out here. Let's start with the daily for the New York Stock Exchange. Oscillators above the zero line. Summation index turned up, both the price and the volume oscillator. That's what's shown here at the bottom of my screen. They're up above the zero line. That is bullish. Summation index ticking up. That is bullish. The NYSE, that had formed the A to B equals CD down. It completed that pattern on December the 12th, and then, boy, you came off of that with wide price spread yesterday. These are significant price bars out here. The retracement that it did of that A to B equals CD, if we go from the high, which came in on November 29th, down to the low out here on December 12th, you can see wide-ranging bar coming into the .786 level. All it's doing is letting some folks off of the elevator. That's all that is going on out here. The New York Stock Exchange, it's going to take out its highs of 10,229. How do I know that? Well, because what it wants to really do, it wants to go, actually I don't know anything. I can just tell you what the stock charts are telling me here right now. The market can do whatever it wants to do, and we'll just assess it as things unfold. Now, as we take a look at what the monthly chart is saying, the monthly chart here, since the month of October, we've been traveling with inside that swing point. We cannot neglect that. That's a swing point. Swing point high, by the way, of October in 2007 inside the New York Stock Exchange. The low there is 98.24. We're inside it. It says it wants to go test the high, 10,387. Hey, it takes out the high there. And that will be very importante. Right now, no bearish candles at all in place. Of course, this is a monthly chart for the New York Stock Exchange. Let me see. Do I have a weekly chart out here? Just see what is going on a weekly basis. There's two monthlies. Here's a weekly chart. I most certainly do have a weekly chart out here. Weekly chart showed a really small bearish engulfing candle. Did have some follow-through. That was the week of November 29th out there because we had a little doji candle up there. But really, if you take a look at the what really has been going on here since the time frame of this breakout bar here on October 18th, it's just been a sideways move. I have said before on wide-ranging bars, the upside, the market does not end on those bars. All that the New York Stock Exchange has been really doing on a weekly basis is traveling inside of a consolidation box out there. Let's go take a look at the S&P 500. S&P 500 here right now coming into that swing point from November 29th with a nice wide-ranging bar. Let's go find some other wide-ranging bars out here. Let's go see what they suggest, what they tell to us. Here's a wide-ranging bar right here from November the 8th. What I mean by wide-ranging bar, number one, you've got a long bar. You close at its session high, so we're looking for something similar. Well, if you come back here, you've got one from November 13th, market moves higher. You've got one here on November 8th, market moves sideways to a little bit down over 2 trading sessions and then off to the races. Next wide-ranging bar out here, you come to October 16th, market went ahead, inter-session, moved down lower, and then off to the races again. Another wide-ranging bar out here, October 10th. Market continued to move higher. We're looking for wide-ranging bars out here that actually gave it up on the very next trading session. We're in the S&P 500. I will continue to do this when we get back from the break. I'm telling you, I'm all the way back to January 2013, and we haven't seen that yet. 877-927-6648. Buying opportunities, folks. Buying opportunities.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Sorry, multitasking there. The Dow is down 32. S&P is off 7. And I had a request to go take a look at platinum. So let me see if I've got the platinum. There we go. Got the continuous contract for platinum. Let me see if I can pull that up on my screen here. Yeah, I can. So now this is the daily chart for platinum. The question was, I believe we're traveling below the June low out here, and that is looks like. Let me pull this back a little bit further. Sorry about that. Give me a second here, folks. I just lost the my cursor. There we go. Now let me pull it back to June here. And, so platinum is not traveling below the July lows here, or June 28th. So June 28th, the low out here inside of platinum, that came in on the trading session of June 28th. I just said that. I'll just say it again. And the low out there in platinum is $12.95.40. Now, we can see here, this is the daily chart for platinum. You can see, and this is one of the things I'll be teaching in this evening's workshop here. This went into a sell mode, really, on this trading session right here, which was on November the 18th. And that was at a price level there. The close of that was $14.11. You're trading right now at $13.44. Out here. Let's see if I've got let me see platinum. Am I getting a live feed? 13.14. No. Let me come back to this chart's not giving me a live feed. Let me come back to this chart here that does. So no, we're still not trading below the June low out here. Again, that low is 1295.40. But nonetheless, the pattern that we were taking a look at on the other tool out there, certainly in a downtrend. The A to B equals CD pattern inside of platinum here. Your A point that I would use is going to be the August 27th high. The low that I would use here is the October 15th low, and that's out at 1361. Your C point right up here into October 30th. 1-to-1 does take you below the June 28th low. That takes you down to about 1284. The volume that I have on the continuous contract back there looks like maybe 16,000 contracts that we will be taking a look at, and today you're down with 15,000 contracts, so that does not bode well for platinum out here. If we take a look at the longer-term time frame, let's look at a monthly chart out here for platinum, see what it is doing. So once platinum breaks below the June low, which is a 1295, it no longer has a swing point to keep it in check. So there's no base building at all on the monthly chart that we're looking at here. And if we take a look at just retracements off of the low, which was in October of 2008 out at $752, ran all the way up to a high in August of 2011. You can see that at 1197, that ends up being your 0.618 retracement. So if we take a look at the larger A to B equals CD down, let's see where the Gartley buy pattern forms here inside of platinum. So your 1-to-1 takes you right down to that 1173. So the Gartley buy pattern that is sitting up here in platinum, that's the 0.618. Folks, just because a 0.618 Gartley buy pattern sets up does not mean that you take it. You need to have a confirmation of that pattern. Here is what this looks like. So it's also about a 1.272 expansion of that area. But if that area fails, it says that it's going to go down to the 1001 area, which is your 0.786 retracement level, and likely forms a 1.618 expansion. Let's see where that expansion actually comes in. I can draw that. So you can do the same thing with your system. Now, the 1.618 swing point expansion is about 1102 out here. So 1197 looks like the next stop, assuming that it can close below 1295.40. Again, it's a monthly chart that we are looking at out here, but the trend is most certainly changed to the downside in platinum. That is on the monthly time frame out there. I hope that that helps you out in Atlanta. That was Danny from Atlanta. Let's look at a weekly chart here as long as I've got the continuous contract on my screen. Now you can see really once it gets below these lows here in June, well, there's a little bit of a swing point that could act as support, and that takes you back to July of 2009. That happens to be in that 1091 to 1187 range. I believe that was the 0.618 retracement area. Yeah, right around the 0.618 retracement area. So look for that to be the next level of support, and that is on platinum. Let's go take a look at some stocks here that are popping and dropping in the marketplace out here. So let's take a look at to the upside, Worthington Industries. Let me see, make sure this is, yeah. So they're just simply out with numbers. Worthington Industries, they are a metal manufacturing company, steel processing, metal products out there. The material sector, the XLB, I believe that is in a nice little buy mode out there. Worthington Industries, they posted a revenue here of, net income, I should say, of for the second quarter, $23 million versus $31. Net sales, $769 versus $622 million. The ticker symbol on Worthington, and we'll look at it when we get back here, is WOR. Dow's off 24, S&P is down 6. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 22 points right now. S&P still down 6 points, trading out at 1804. And before the break, I pulled up Worthington Industries. Ticker symbol out there is WOR. Now, the chart that I've got on my screen here, this is a chart I'll be sharing with everyone that would like to attend this evening's workshop. So if you haven't signed up, you can do that. Do that right now. It's going to be standing room only. That's if you want to stand while you watch it online. But we've got a great attendance. So I do want to say thank you. I'm grateful for all of you that have signed up, and I'm grateful for all of you that maybe you were sitting on the fence and you're saying, hey, I'm going to go over there, and because this is too easy to do. There's no obligation on my part. All I have to do is go over to the homepage of TFNN.com, give a little bit of information, put in a credit card that's not charged, get free access to incredible education, be taught something that you'll be able to use for your arsenal for every day forward from this. We're taking a look at Worthington on a weekly chart out here. Now, gave you a nice little couple different buy signals. The most recent one on the weekly chart, that took place right here, the June 22nd, 2012 out there. It did form a little bullish engulfing candle, but that wasn't the reason that it went ahead and gave you the signal. Now, that was at a price level there when that buy signal came in. That was at a close of 17.41. It's trading at 48.45 right now. Now, utilizing this system here, you would never have gotten jostled out of this stock from that time period. And that is all. That is the primary, one of the primary reasons why I developed this system. I just simply got sick and tired of missing the read of the market. So when you get sick and tired of something, you either quit, and I am not a quitter. Persistence, it isn't just my middle name. It's wrapped around my entire name out there. Never give up. Who is that? Jim Valvano out there. Love that guy, and never give up, folks. So that's why I went ahead and created a system and especially, with the Fed moving out of the market, now this is a system that's been tested over time. So I've been able to go back to 1928 because that's the data that I have and tested to make sure that it was able to get me out at significant highs in the market as well as get me back in on significant lows and not get jostled out. And it works that way on any commodity, any currency, any stock chart, any time frame. And you always want to know the time frames that you're dealing with out there. So those are days gone by. It doesn't mean that I'm not going to have trades that don't fail. That's not what I'm saying at all. That's going to happen. That's guaranteed to happen out here. But to be in the right now, and the beauty is, and I get calls. Luckily, it's not as often as maybe it used to be. Listeners out there, folks that, listeners, clients, folks that have signed up for the newsletter, whatever it would be, and people that had been on the wrong side of the trade. And I understand that pain. I understand that pain better than most people should ever understand. I don't want you to understand that pain. Oftentimes, us traders out here, sometimes we don't heed our own advice out there, and I have let on occasion. Well, it was quite a while ago, so it hasn't happened in forever. Just simply ignored my own rule out there, my own stop rules out there, and I let a trade turn into an investment, and it turned into a really bad investment. And the question was each morning, if I sell now, am I going to be the one that turns the market, and it's going to start going the other way? Well, that's the cool thing about this tool. You don't have to go through that wackiness out there because the tool will tell you exactly where the trend is, and if the market turns, you'll be able to turn with it as well, and you won't have to go through all that pain and all that aggravation out there. Don't fight. Forget about don't fight the Fed. That's irrelevant. It's don't fight the trend. In this case here in Worthington, you would have been in on this equity. There have been a couple of cautionary signs along the way, but those cautionary signs would not have gotten you out of the market. They were really just buying opportunities out there, just like the pullbacks that we're going to see, take place maybe over the next day or two. They're really buying opportunities. They are not selling opportunities in the marketplace. That's what the weekly chart for Worthington looks like. Daily chart will show a little bit more chop. That's why, depending on the time frame that you are trading in, you want to make sure that so the daily, what's nice about the daily charts is that the dailies will get you into a trend that's underway on the weekly chart that so that you can either add to a position or maybe you've missed a move and you'd like to be able to get in on something that has a run up, even an equity like this. Of course, the equity could just be the general market altogether out there. And look, the cool thing about this tool is when there is a market high, if you would like to learn how to identify buy lows and sell highs, then come over to the come over and click on my name on the homepage at TFNN.com. I've got a workshop out there called Buying and Selling the D Point, and that's what you need to be able to do out there. You need to learn how to buy and sell the D Point out here. But if you want to get the real meat of any sandwich, of any hamburger out here, make sure that you are trading in the direction of your friend. And if we take a look at the direction of the trend right now, and let's take a look at it on the New York Stock Exchange right now, and this is the daily chart, the direction of that trend, you can see we're now into the blue light special, blue skies ahead out here. This is after, so here basically this was giving you on the daily chart. So it's a daily chart that we're looking at. We got the buy signal. Now, you're not trading the New York Stock Exchange, but we got the buy signal. That was the opportunity to come back into the market because you'll see when we switch over to the weekly chart out here, the weekly chart has been in a strong bullish mode. The strong bullish mode that we saw inside of the New York Stock Exchange. The last one came in June 8th, the week of June 8th, 2012 out there. You actually got the confirmation on June 15th. Well, the real confirmation of taking the long side of the New York Stock Exchange really was June 29th, 2012. And utilizing the system here, you would never have been jostled out from that time frame. So if you think that that will help you, then go over to the homepage at TFNN.com and sign up so that you too can get access to this workshop. Now, I see that natural gas here. I saw a little message in the market. Somebody said UNG, whoa. I think that means that UNG is taken off to the top side. So let's go take a look at the natural gas contract out here. I think that's maybe what that message meant. WOWO, it most certainly did. So that resistance area that was set up by this potential, well, not by this potential, by this gap down, looks like that window is being fixed, and it's being fixed with higher price. Now, volume here to the upside so far 67,000 contracts going into the swing point that has got 252,000 up here. So it's coming in a bit light out there, but nonetheless, that is no longer an area of resistance so long as it closes above $4.34. A lot of trading time left in the trading day out here. Right now, you've got, let's see what else is moving in the market here, some things that we certainly haven't. Well, you know what we didn't do? We didn't look at the ETF structure. So let's go take a look at the ETFs. Let's look at them on a daily basis. The ETFs out here, that's why I was in that tab, because that's what I wanted to do. So the ETFs, you got formed a C point yesterday, came off that C point with conviction, with volume. This is the SPY that we are looking at. The SPY here does not have a confirmed A to B equals CD up just yet, but it will make it. That'll take you up to the 184.30 to 186.18 area. I suspect that that's what we'll see by the end of the year. That's on the daily. For the SPYs, volume yesterday, just simply massive volume out there. That was a volume of 234 million shares moving into the 55 million shares from the 29th of November out there, the day after Thanksgiving. You would just double that volume just to kind of put it into a frame of reference. Now, the Qs here. Sometimes people you can take a look at the volume here. And so let me, for those of you that have been listening to me for a while, you've heard me talk about this little phenomena before. So let's go actually take a look at it again and put it in perspective, because I know that there are folks that are out there, and rightfully so, that would take a look at this bar here and say we actually made a lower low yesterday inside of the Qs. And you're absolutely right. We made a lower low with volume inside of the Qs. Rejected that area and moved topside yesterday. Now here's the cool thing about the Qs. When the Qs make high, so this is how this works both ways, and that's the beauty of it. You will find, if you go back and you take a look at the Q chart, that high volume lows end up being initiation points of moves higher. That's right. You just heard that here if you hadn't heard it before. The Qs, those high volume lows, end up, and I can't tell you why, how it's positioned. I just know that that's one of those patterns that is out there that works more often than not. So the mere fact that we were pushing down with volume, and it was a high volume bar, and then pushing highs with volume yesterday, that's got the double positive whammy effect here, because you did volume yesterday of 68 million shares. Let's go prove the point out here. Take a look at this low that took place on November 7th. That's a high volume bar that sticks out, 52 million shares. Did that mark a low? Or did that mark the beginning of an initiation move? And I will argue it most certainly did. Let's go back a little bit further. Let's take a look at the trading session here that took place on, this is October 9th. Another high volume bar, 64 million shares. Did that create an initiation move to the upside? It most certainly did. Let's not stop there. Let's come back and let's take a look at these lows. Now, this one here from June 20th, there was a move lower for two trading sessions. They both were also high-volume bars. That ended up being what? The initiation of a move higher. That one there was not to the day. If we take a look right back here, the trading session of April 17th as well as April the 18th, two high-volume bars, did that create an initiation move to the upside? It most certainly did. Let's come and take a look at it. That was a breakout session, so that volume bar doesn't work for us. Let's take a look at November 14th, 2012. Big volume there. That didn't mark the low, but what did was November 16th. That had 70 million shares, another high-volume bar out there. So the cool thing about the Qs, doesn't work this way on the SPYs, doesn't work this way on the IWM, doesn't work this way on the diamonds. I can't tell you why it works. Sometimes in life, folks, it's just like electricity, which we all know works. And I know that it works because one time I went to unplug, I was 13, 14 years old. I went to unplug a vacuum cleaner because a dishwasher hose had busted. And I, of course, like any young lad would do, because you don't want to get your shoes wet, I took my shoes off, walked over to unplug that vacuum cleaner. It had a little linoleum floor back then, and of course, as soon as I grabbed that switch, you can guess what happened. I was introduced to electricity in a big way, because when you grab it, your muscles clench and tighten, and I could not break through of that. And thankfully, my mom saw what was going on, and she went out there and she grabbed me and pulled me away from that. Of course, the vacuum cleaner was still going. It was, I think it had turned on or something, and fire trucks came and all that type of stuff. So I've had electricity go through me. And what does that mean? That means, when you learn from your experiences, and that's what I like to do. And now any electrical work that I do, I turn the circuit breaker is off, baby. That circuit breaker is off before I do anything, or preferably just call the electrician, let them do that. In any event, the high-volume bars inside of the Qs, they have this phenomena, not one that I can tell you why, just one that I can tell you works. And that was really, for me, that was really the beauty of yesterday's bar inside of the Qs, because where we could argue, if you didn't know that little morsel, that little pearl right there, is going to be worth its weight in gold to you when it comes to trading, because you will now look at the Qs a whole lot different, because in this case here, we got our full bang for the buck on both sides of the trade out here inside of the Qs, because it was pushing lower with volume and those mark initiation points, as well as it was pushing higher with volume. 68 million shares pushing into the swing point high of 22 million shares from December 9th out there. That's a beautiful thing. That sets up a run to a price level of probably about the $87 inside of the QQQ out there. Now, if we take a look at the Dow Diamonds, the Diamonds broke a swing point, so they confirmed an A to B equals CD up yesterday. They broke that swing point from November 29th. That had 3 million shares. Let's double it to 6 million shares. Shoot, you passed it with 15 million shares. Your A to B equals CD up. I say forget the A to B equals CD up. Why? Because what we really have out here is we've got the measured move that takes you to about 165. You're trading at 160, 165. So it's got that, and that's the minimum move, 165 out there. Remember, when you break a consolidation, which the Diamonds have done, which the Dow has done, your move is equal to or greater than. So it looks like the Dow is going to be one of the indexes that powers us on through the market out here. The A to B equals CD. If I was going to draw one in here, the A to B equals CD pattern, I probably would have come off of this swing point here. Let's take the conservative approach. Now let's take a version of the conservative approach. November 5th's little swing point out here. I would go from that low to the high out here on November 29th down to the low that was put in a couple of trading sessions ago, and let's just see where 1-to-1 takes us. 1-to-1 takes us to 163. 1-to-1.272 takes us to 165.60. That's the number, 165.60, where the Diamonds are likely to head to here. Then I'd say probably by the end of the year, taking us into December 31st. You've got the IWM. Now, the IWM, here's where we get a ton of information released to us, because the not so much the IWM. Remember, the Russell 2000, the index itself, has a island reversal pattern out there. So it is from that pattern that we really get the meaning for being able to overcome any kind of hurdles out there. But nonetheless, if we take a look at the IWM, it completed a 1-to-1 A to B equals CD down. It was natural. You came up yesterday. You moved higher with 52 million shares. Now, this was not pushing lows. This was pushing highs yesterday. 52 million shares moving into a downdraft that only had 43 million shares, and the swing point from November 29th with 15, really 30 million shares. So you're pushing the IWM now, which is, in essence has given us the weakest signal because of the island reversal pattern that is out there, and it is pushing highs with volume. So in my opinion, the ETF structure, if you put it together with the Qs, you take a look at the weak structure, the IWM, you take a look at the Dow Diamonds that have confirmed an A to B equals CD up, what more do we need to know? Santa Claus has arrived. Thank you, Uncle Ben. 877-927-6648. And yes, Pete D, that's why I am so happy, because of that electroshock therapy that I had when I was 13 years old. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I believe that we're all here to contribute something unique, and that deep within us lies a special gift, a special talent, our own bit of genius, just waiting to be tapped into. When it comes to trading and investing, I can help you tap into yours. Hi, I'm Steve Rhodes with TFNN, and on Thursday, December 19th, I'm hosting a 1-hour workshop where I'll share with you my most incredible discovery yet, the Rhodes Momentum Indicator. I developed this tool with one outcome in mind, to do what nobody else considered possible, to put the power of the most advanced indicator, scanner, and trading strategy in the hands of people just like you and me. I can promise you this, you'll never look at a chart the same way again. This event is available to all subscribers to my newsletter service, Mastering Probability, which for the holidays is available free for the next 30 days. No charge whatsoever to new subscribers and no obligation on your part. Please join me by going to the homepage at TFNN.com to sign up for this once-in-a-lifetime opportunity.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. It is a terrific Thursday, and that means, well, I believe Basil's not doing his show on Thursday. I think he's just, getting back into the swing of things. So Monday, Wednesday, and Friday out here. We do have Larry Pesavento. He'll be with us from the 12 to 1 o'clock hour. Daryl Martin from 1 to 2. David White, 2 to 3. With it being Thursday, we've got our man Andy Hecht with us 3 to 4, Tom O'Brien show from 4 to 6, and then me from 6:30 to 7:30. That's right. It is December 19th. My father passed away, I guess, man, time flies, a quarter of a century ago, 25 years ago. But today, December 19th, is his birthday out there. So, and great things have happened to me on December 19th. And so one of those things, I opened up my first day of business for a new product that I had created out, that I put out at Disney. The first location that I opened was at Epcot Center. It was also on December 19th. It was December 19th, 1999, just so we were going into the year 2000. Turned out to be the most successful retail product that Disney ever had per square foot. And so good things happened to me. There's going to be good things happening tonight. Hope that you can find it within yourself to join me, because all it really takes is going over to the homepage of TFNN.com, signing up, which means you're going to give a credit card, but it's not going to be charged. That's all. It's not going to be charged. 29 days from now, you can say, hey, Steve-O, you taught me a lot, but, I'm not that into your style or what have you. So be it. Let me teach you. Let me give you that gift. This is a holiday season, folks. So, let me, I know that sometimes it's difficult for people. I'm a giver, not a receiver. So I can understand, those folks that don't sign up, because some people aren't really great at receiving. Some people are just better at giving. But give me that opportunity to give you this gift out here. Good things happen on December 19th, and I just simply will go ahead and the product that I created was where it's a laser engraved etching product, subsurface engraving, where I recreated inside solid blocks of crystal, 2- and 3-dimensional images. First started off with a photograph of photos that we would take, and we would instantly recreate those inside solid blocks of crystal. In fact, it's a interesting story. I don't think I can really tell the guy's version that quickly out there, but if you've ever been, and this product here, most people have seen. So I created this. This was a product that was created based on the Star Wars beam lasers, shooting things out of the sky. And in order for them to be able to test things, they needed to do it in solid, transparent materials, because it was all about, talked about electricity before. It's all about creating energy to a certain spot. And so inside solid blocks of crystal you created these small little fractures, and I just simply, from a dot matrix printing standpoint, turned those into art out there. And the first time I came across an image like that was in Russia, when I was over there right after Perestroika, and lo and behold, I ended up creating a business out of that. Opportunities are always in front of us. You just got to know when to grab them. And in any event, I was able to turn that into quite a successful business out there. So join me tonight, folks. I would appreciate it. Right now, the Dow is trading off 14 points. It's silver and gold that are truly getting whacked out here. Gold is off $39 right now. It's trading at $11.96. We check in on gold here momentarily. Gold is, let's see if I can find the daily chart. Yeah, my notations are gone, but I'll put those in. So gold is going to head down and at least test, possibly break the June 28th low. 1179.40 is the number that you want to be watching out there on gold. Now, silver is acting stronger than gold here. Silver right now, although it's trading off about 4 4/10%, but it is trading into its most recent swing point, which is December 4th, with volume. That had 38,000 contracts. You're coming into a 37,000 right now, but luckily, volume-wise, 89,000 contracts back on that day. But silver probably will head down and test the 1818 area. Folks, thanks so much for being here. I'll really look forward to seeing each of you this evening at 6:30 or on your members page on the archive version of tonight's workshop. Have a great Thursday, folks. Look forward to seeing you bright and early. Probably a little hangover because it is Sake Thursday night. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.